right, market wrap. Wednesday, June 5th. Wow, almost half the year is gone already. Goes so fast. Nice close again in stocks today. Nice rally. You know, the market has already recovered and then some. All the ground it lost since the infamous Trump Mexico tariff announcement. All right, that was back on last Thursday, May 30th. That's all erased. And by the way, that was happening already. And if you want to talk about what Powell put yesterday, his comments, yes, that probably added some fuel to the fire. But, you know, I said the window of the turnaround. And late last week, I said we will be getting support in the market. And that was all based on these bank reserve flows that I've been talking about over and over and over. I'm not going to get into it again. But basically, it's a technical condition, and I'll say it one more time as it pertains to the bond market. The whole entire crazy bond market rally and drop in yields was totally related. It was technical and totally the result of, number one, the debt ceiling, and number two, the Fed bringing reserve balances down, which forced the banks into Tier 1 assets, because as the reserves were drained out and as the Treasury could not issue any more bonds, there was a squeeze. The banks needed those assets. By the way, somebody asked me, or in a comment, and I wanted to mention this, on April 1st, the Bank for International Settlements, that is the central bank for central banks, made gold a Tier 1 asset from, it was a Tier 3 asset. Now it is a Tier 1 asset. So it's the same thing as treasuries or reserves. It's very interesting. Gold actually bottomed out on May 2nd. It's been going up. Now since May 2nd until I guess about May 20th, it was kind of basing out. But the bottom was in on May 2nd. And then recently, in the past week, you had this big sharp rise up to what has been now, I don't know how many times it's gotten up to this 1340 level and then failed. Today was kind of interesting if you look at it, because we had a day where stocks were very strong, yields backed up a little bit, not a lot. The dollar was rallying today, and oil was down, and you had gold close higher. Now it closed off its highs, but it did close higher. So very interesting. And if that it can be sustained, if these gains can be sustained, then I suspect we're going to go higher. But also, again, this reclassification of gold from a Tier 3 asset to a Tier 1 asset, very interesting. I mean, it would be too simplistic to say, oh, you got to buy gold because of that, because all the central banks are going to run out. A lot of these central banks, anyway, they've been buying gold for a long time. The People's Bank of China and particularly the Bank of Russia, they've been buying gold now for a long time. But this reclassification is something maybe, you know, could be a game changer. I don't know, long term. This is not something like the central banks just all rush out at once. Hey, we're going to stock up on gold. No. The main reserve that they hold is dollars, of course, then a mix of other currencies, and maybe there's some gold in that mix. But they have been buyers on balance. Which brings me to something. I had a guy who signed up briefly for my report back in February. And of course, he quit right away. A lot of, you know, this stuff that I do is over people's heads. Most people are just looking for a system fairy. They don't want to learn. They don't want to be informed. They don't want to be educated. They don't want to elevate themselves. They want a system fairy that just tells them, buy here, sell here. You're never going to lose any money. It's going to be a sweet ride. It's going to be fantastic. Your life is going to be beautiful. All butterflies and rainbows. Okay, sorry, I don't sell that. All right. Now, if you find that, hey, more power to you. But I don't know where you're going to find that. I've been in this business for 40 years. I've been a trader on 4 exchanges. I manage money for a major international bank and also a major hedge fund. I mean, I've been around, you know. So the guy, it's funny because I came across his email again today for some reason. It was back in February. He's like, why are people going to buy, and I was recommending gold. He's like, why are people going to buy gold when stocks are going up? Now, you know, that's the kind of a question which is not really a question. It's a question almost with the tone like he wants to show me how smart he is and how dumb I am. Like, why, hey Mike, why is gold gonna go up? Well, no, why are investors gonna buy gold when stocks are going up? Right? One of those kind of questions. Hey, Mr. Smarty Pants, okay? Why do you need gold? Well, guess what? Gold is economically sensitive. Don't forget, gold is an industrial metal. We use it in jewelry, we use it in electronics. It is economically sensitive. Yes, investment demand is a significant part, but by far jewelry demand, and that's economically sensitive when things are going better. Now, I guess the moral of the story is, since February, I think it was 2nd or something like that, February 10th, yeah, February 10th, the date of that email that guy sent to me, and I tried to explain this. I said, well, yeah, you know, investment demand is important, but you have this demand, you have this demand, you have this demand. Since February 10th, with the, hey, why is anyone going to buy gold when stocks are going up? Oh, Mr. Smarty Pants, why? Well, guess what? Gold's up from February 2nd and stocks are up. They move in tandem. Now, I can tell you this. If we go in a recession, and I highly, highly doubt that. Remember, I put myself out there. I say if we go in a recession, you could throw all kinds of attacks and criticism at me that you want. If we go in a recession, gold's going to go down. Remember, I said that too. All right? And by the way, speaking of recession, the Fed's beige book came out today, and it was very, very upbeat. They said, you know, they said the things that I've been telling you for so long, that credit demand was broad and strong. Credit demand. Now, if things are really weak, remember, yeah, the banks would love to lend and finance companies would love to lend, but you need demand. You need people wanting credit. And people will demand credit when they want to go out and purchase things, maybe houses, maybe cars, whatever. I told you that. Car loans, auto loans, have been up for 21 weeks in a row straight. That goes all through the period from the beginning of this year, when we had all these worries about the tariffs and China and trade wars and Mexico and everything. So there you have it. Anyway, all this information every single day, chock-packed in my report, MMT Trader. Remember, it's the only applied MMT that you will find anywhere. There's things that I do, there's analysis that I do, that not even the MMT guys do. All right? $250 a month, it's worth it. It's going to go up to $1,000 a month eventually. Started off at 75. You go to pitbulleconomics.com, sign up. And by the way, we had so many people on here last week and the week before. We said, the market's crashing. We're going to have another Lehman Brothers. Mike, you don't know what you thought. You're leading everybody to slaughter. Bought the bottom again. Sold the top back in May. You can't do better than that, folks. You can't do better.